Good afternoon. Shri Sanjeev Sanyal, Principal Economic Advisor, Government of India. Distinguished guests, members of media, ladies and gentlemen. A very warm welcome to you all to the 12th edition of CII Financial Markets Summit and to this very important and interesting session with Shri Sanyal. On behalf of CII and my personal behalf, would like to extend a very warm welcome to you, Sanjeev. Sanjeev really needs no introduction. However, for the benefit of the participants, Sanjeev Sanyal is currently the Principal Economic Advisor to the Government of India and also represents India on a number of international forums. As the co-chair of the G20 Framework Working Group, he has been one of the main architects of the G20's Global Action Plan used to coordinate the global response to the COVID-19 pandemic. Prior to joining the government in February 2017, he spent over 2 decades in the financial sector and was global strategist and managing director at Deutsche Bank. Sanjeev is a well-known urban theorist and writer. In 2007, he was awarded the Eisenhower Fellowship for his work on urban dynamics. He has been a visiting scholar at Oxford University, adjunct fellow at the Institute of Policy Studies, Singapore, and a senior fellow at the Worldwide Fund for Nature, a fellow of the Royal Geographical Society, London, and an honorary professor of Jawaharlal Nehru University, Delhi. In 2015-16, he served in the Future City subcommittee of the Singapore government, tasked with building a long-term vision for the city-state. Shri Sanyal has always been very kind and warm to us at CII and has been our guiding light in our time of need. With that, without further ado, I would like to now call upon Shri Sanyal to please share his insights. Over to you, Sanjeev.
Thank you very much, Nilesh, for that very kind introduction. As many of you know, he's an old friend, as indeed are many of you who I can see on the screen. So, pleasure to be here amongst friends. We are obviously meeting in unusual times, to say the least. The last 1.5 years have been very tricky times for the world economy. Even when you have, for example, the capital markets, the equity markets in particular, have done spectacularly well in recent times, there is always questions at everybody's mind about excess liquidity, valuations, and these kinds of issues. Now, obviously, as a policymaker, it is not my place to comment on valuations and stock market levels. I always avoid that. But let me say that the key here is not to, for policymakers to determine levels, but make sure that the systems continue to function and they do not get jammed while going up or down. So we had put in place various measures not so long ago on making sure that there's not too much leverage in the equity markets. So I think whatever you may think about valuations, I think the market will not be disrupted if there are large movements in either direction. As far as issues relating to normalization of global liquidity, now clearly, the world is sloshing with global liquidity. There's no doubt about that. That shows up in many places, not just in capital markets, but also in foreign exchange reserves and many other indicators. Now, my talks with global, particularly US policymakers, is that they do recognize that at some point in time they will have to withdraw it. They intend to do this as softly as possible because people do remember the taper tantrum episode from the past. So it will be smooth, not sudden. And it's something that that even our own central bank, Reserve Bank of India, is conscious of. So, we recognize that excess liquidity is something we need to watch out for. And we, at least in India, can claim that to a large extent we have held things in some reasonable way, at least in issuance of rupee and so on. Let me say that as far as the economy is concerned, sure, we went through a major shock, but I think the economy has been quite resilient. And at least the financial system has actually come off rather well. Obviously, I'm not just talking about the stock markets, which have done very well, but there is other parts of the financial system, like, for example, the banking system. I think all the effort we put into cleaning the banking system up over the years, particularly in the year from 2017, 18, 19. Now, while we were doing that cleanup, it may have been painful. The use of the Insolvency and Bankruptcy Code to take some very large companies uh, through the insolvency process. You remember the term "dirty dozen" being used in the media, but I think they did pay us a good dividend, in the sense that we went into this crisis with a banking system that was already attempting to clean itself. Creditor rights were strengthened, credit behavior has changed, and of course, while it may have been somewhat painful in terms of having slowed growth down from what it could have been, it did mean that we went into this COVID episode with a banking system that was not very leveraged. That's also true of the non-bank financial companies as well. So both NBFCs and banks were not leveraged. Corporates were not leveraged. So I would argue that as a result of this, we were not off balance when we went into this shock. And so the financial system, particularly the banking and NBFC system, has actually come off this cycle rather better than you could have ever hoped. And that's a good thing, because it does mean that although they may not be right now going out and aggressively lending, they are well capitalized and they are capable of doing it as and when the opportunity arises. Now, of course, when can we press the accelerator and get going? Well, that partly depends on whether or not we have a third wave. If you will remember, the economy actually accelerated quite strongly between October last year and March this year. And then we got hit by the second wave. But for that, we would have already been growing far above pre-COVID levels already. But we did have that speed breaker. That speed breaker, of course, had bigger impact on health than on the economy. For that quarter of April to June 2021, we did see 20% plus year-on-year growth, albeit on a much lower base. But nevertheless, it does show that there is capacity in the economy to re-accelerate when the opportunity arises. On the fiscal side, we have a lot of space, if necessary, to accelerate it further. And we have made it very clear that we intend to use this fiscal space on capital expenditure. That is our chief way in which we intend to support demand in the system as and when it comes. It is a very supply-sider's approach to demand management, I admit, but this is where we think the biggest bang for the buck is in terms of creating demand and the multipliers on job creation. Not to mention also the fact that this will leave us with assets against the debts we run up. So this is an important thing, because future generations should also be left with assets, not just with debts. So this is important because, as you know, this has been our consistent approach to take a somewhat supply side approach to our economic management, which may have not been exactly what many experts around the world and many governments around the world have attempted or recommended. But we have stuck with it and taken a much more supply side approach to things. And I think that will pay us dividends in the longer run. I don't think we are going to have any problem on the demand side. When we need demand and we have a clear road, we will press the accelerator from the fiscal side and ramp things up. We have the capacity to do it. Many other countries may not, but we do. Even on the monetary side, we intend to be quite, withdrawal of liquidity will not be done in a sudden way. I think the Reserve Bank governor has made this point repeatedly, clearly, that it will be done in a responsible way that does not recover the economy. The of supply side measures that have done in the last several years will begin to pay. This is just insolvency and bankruptcies, and the creation now of the bad bank. All of this is cleaning up our systems. and creating the frameworks for longer term growth. But we have been also doing many more sectoral reforms recently, whether it is in terms of opening up the drone sector or the cartography and geospatial sector. We have opened completely new vistas out, removal of the retrospective taxes, removal of all kinds of outdated telecom regulations on the IT BPO stuff, and so on and so forth. You can see that we are very much a responsive government, which, we take feedback from you and we will respond in whichever way, including taking unusual interventions such as the incentive-linked manufacturing incentives. The thing we have done
PLI
recently
scheme
for telecoms, for example. Sorry?
The PLI scheme, production linked incentive.
The PLI scheme, production linked incentive, that's the one. So all of these have been done. Now we recognize, however, that the somewhat overinflated, what should I say? So somewhat over reliance on an equity-based generation and financing of growth is not necessarily the only way forward. While the banking system has gone through cleaning up and is hopefully and appears to be in much better shape than anybody hoped for, we have to get to a stage where they begin to lend again on a large scale. And I would argue that the Indian banking system needs to be an order of magnitude larger than it is today if we want to sustain growth over in the next few decades. This is an important point because no country in the world has grown on one leg, right? You can hop on one leg, but if you want to run, you've got to get your other leg running, the debt part of it. Some of it obviously comes from loans, but also the corporate debt market has to also fire. And in this context, we did some big reforms recently. One of them is the introduction of bilateral netting, and not just of the law, but all the rules and regulations relating to bilateral netting have been done. This creates the space for the development of a CDS market, which in turn, as you know, is critical for the creation of a corporate debt market. So all the rules and regulations you need from SEBI, RBI, Finance Ministry, all are there. As of May, all the pieces are there. Now, frankly, since you are the intended beneficiaries, please come back and tell me if there's anything more to do. As far as I know, no. So we now need to see the CDS market to grow responsibly, but to grow. And that will allow for all the other pieces to fall together, whether it's the corporate debt, AT1, and all these other kinds of bond markets, and therefore the richness of it. The other area of financing that we have opened up, which is not capital markets led, but is a part of finance, is the opening up of factoring. This is an important source of trade finance worldwide. In India, for reasons that I do not understand, they were heavily restricted till now. But we have now opened it up, and it should be a good source of financing, particularly for small and medium enterprises. They can finance them against their invoices. And of course, it is potentially a big market, allowing penetration for NBFCs in particular. Banks can do it as well, but NBFCs in particular. So this is an area, and of course, trading can also happen in that. So in that sense, it can go into the securities arena as well. So that is basically where we are at. I know there are some questions, I'm sure, in your mind about our inclusion in the global bond index. In that context, let me say that most, I would say 99% of all the stuff that needs to be done has been done. We obviously last year opened up a section of our government debt market for foreign players. Some have invested into it, but less than 50% of what was open. But I think there is a case here that we get ourselves into the global bond index, and many of the micro steps, whether it's Euro clear, taxation, etc., is getting done. So rest assured that in this financial year, we at least some announcement should happen on that space so that we can get into these index. They are good, stable source of money for our bond index, and especially if we are going to begin preparing for a period where slowly but steadily liquidity will begin to withdraw from the world. We want other sources of and pockets of liquidity and pools of liquidity to open up for us. Obviously, it's good for the general market, but as in the government, we are the biggest borrower in the system. So obviously, we are rather keen that there are pools of capital that can, continue to support our borrowing programs. With that, let me stop. If there are any questions, I'm happy to answer them.
Thank you, Sanjeev. Mr. Nishit Desai of Nishit Desai Associates have some suggestion. Nishit Bhai.
Wonderful. Thank you very much, Nilesh and Sanjeevji, for a quick overview of the whole policy framework that's coming up. Uh, in fact, I've been associated with mobilizing asset management industry since early 90s and a lot of institutional investors, including the investors in the NSE. So I have a little question on that, if you can reply now, or we can have a meeting later on. The listing of NSE has been stalled for almost more than 5 years, sir. And with both domestic and foreign investors are unable to realize the fair value of their investments. I know that there are certain investigations pending against the exchange, but despite merchant bankers out of the view and adding them to disclosures, nothing has happened. If something could be done, that would be very helpful. It will be a big accelerator to the financial markets. And on behalf of course, I must disclose I'm representing foreign investors, major ones in the NSE, in interest of transparency. So, but it would be very helpful if that could be done. It would be, people have trusted India a lot, especially coming into this market. So every time I talk to the board or other people, this is what one question keeps on coming up, and I won't raise too many other questions, but I think the pace at which we are moving is very good. I think if we can just add this little fuel to the fire, I think it will be a positive fire, sure. So I don't want to.
I can't respond off the top of my head on a specific case because I don't know the specifics of it. But let me say that it is a fair point that we do want new stuff to get listed in general, not just this one, but other ones as well, new unicorns and so on. Because this is a good way to suck up liquidity and transfer it into productive use and realize value. So I think as a general principle, I agree that you want to encourage listing. Now, this specific case, I don't know the details and I'm not up to date with it. So,
you, sir, is it possible to investors will be keen meeting with you, sir? So that
you're very welcome. Many of you have met me in the past.
Too much time, but at least you'll understand the perspective.
It's a matter of getting yourself some time, and please come and meet me. No problem at all.
Really appreciate. Thank you.
Thank you, Nishit Bhai. Next question is from Mahesh Nandurkar of Jefferies. Mahesh Bhai.
Thank you, Nilesh, for giving me this chance, and Sanjeev, thank you very much for this session. I've got a couple of questions, more on the macro side. One is on the fiscal front. I mean, you did mention that you have a lot of space, and yes, and all of us can very well see that, looking at a very, very buoyant trend in the tax collections. But what we've seen is that the expenditure side, once again, and as you rightly mentioned, we can clearly see that the government is spending much more on the capex side, and much less elsewhere. But still, on an overall basis, it's looking like that we will be heading towards a fiscal deficit. I mean, as against the 6.8% budgeted, for FY22. Most of the, sort of members on the street have lowered the fiscal deficit target by at least 50-60 basis points. And this is even after assuming that the disinvestment revenue might fall significantly short. So just want to check with you that yes, we have a lot of space, and as you rightly mentioned, if need be, you will press the accelerator. But assuming that there is no need, because it's looking like economic recovery is taking place nicely, and hopefully there is no third wave, etc., or maybe not a meaningful impact, then would the government's priorities will be to use that space to actually cut down fiscal deficit, or do more of spending?
So our commitment is to, because we have a somewhat supply side view of things, our commitment is to create this infrastructure anyway. We can time them differently depending on economic cycles and demand requirements, but we want to create this infrastructure anyway. It comes from a philosophical view, so you must know what it is, which is this, that the poor in the country need access to good world-class infrastructure. This is somewhat different view than many other specialists and economists and experts may have, which is that what will the poor do with world-class infrastructure? Our view is, well, the rich are rich because they have access to good infrastructure. And if you give the poor access to that infrastructure, they'll also become rich. In addition, of course, the creation of the infrastructure itself is a good demand booster and a job booster and skill booster. So we are very committed to doing this. We will change the the order and pace of it according to economic requirements. But our commitment to improving heavy infrastructure in places like Eastern UP or the Northeast remains irrespective. And we intend to do that. Now, as I mentioned, the exact pace and sequencing of it may change a little bit because we understand demand management is also part of the game. But, since we see this primarily as a supply side effort, we remain committed to doing that infrastructure irrespective.
Okay,
Another,
if I can,
yeah,
so
go ahead, Mahesh.
Yeah, okay, thanks. So if you can just a quick follow-up, on the disinvestment side itself, I mean, we have a pretty large budget of 1.75 lakh crore. But maybe on like BPCL side and Concor and a few other names that we've talked about in terms of the strategic disinvestment, as of now, the market's probably not seeing much of a progress. So I was just wondering that we should also sort of keep this in mind that the market valuations today are at a very attractive levels, and even from the government side, I think the best realization can happen sooner rather than later. But I mean, yeah, but
all I can say is point taken. It's quite obvious this is a good time to do it if we ever had to do it. We are committed to doing it. There are some processes we have to go through because that's how it is. But we are not apologetic about either monetization or privatization. We believe that there are resources that need to be unlocked in the government that have better ways of deploying those resources. Not to mention create value as well. If some of these assets are better managed by the private sector, then you create value as well. So it is something we are committed to, but the exact pace at which it is done, obviously, it is a government and will have to go through some processes. So we are going to go through them, but hopefully fast enough.
Okay, thank you.
Thank you, Sanjeev. Ramdevji has a point which he would like to raise. Ramdevji?
Yeah. Good afternoon, everybody. Sanjeev, one of the things is about ESOP taxation in the hands of the employees. So 8-10 years back, it was very simple, but now it has become so complicated that employees at times they are stuck with the option exercised, and actually they are not able to. They have to pay a lot of taxes even before they have sold it. So very purpose of giving the ESOP to the employee is defeated. Because they have to pay taxes at the time of vesting rather than final disinvestment. So my suggestion is that whatever taxation is there, we are not wanting any relief on the taxation, 30%, 25%, whatever, but let it be paid only when he finally sells it, not at the time of vesting, which was the earlier situation, and now it has become very complicated.
Well, I am sympathetic to that view. I'll look into it. But okay, I mean, thank you for the feedback. All I can say, and I say I can see what you're saying, and it makes sense. Yes.
We have still some time for questions. If anyone would like to raise a question.
With permission, may I ask a question, Rajiv?
Yes, Mr. Luthra. Yes, Mr. Luthra.
No problem with my video. Good afternoon, Mr. Sanyal. You said a very interesting thing about the poor getting good infrastructure. There's a fatal flaw, sir, in my view, in our system. We don't have long-term funding. What are we doing about that as a government?
So there is an issue in that long-term funding in India has been not easy to get for these kinds of things for several reasons. One of them is institutional. So we did create a new institution called NIIF, which is took some years to get going, but is now deploying its funds. And we are in the process of creating a new development finance institution, as you may be knowing. We have also tied up with various long-term investors, pension funds, sovereign wealth funds, etc., to provide these kinds of funding. But in the end, if you want to have this as a process rather than in a large way, then we need to create a deep enough bond market, which can, where you can issue 10 years plus bonds, including the government itself. Today, the government bond market itself is very shallow in the sense that at the 10-year point, it's very liquid, and then at very, very short, less than 5 years. So if you don't have a full and functioning bond market of which you can do all these prices going out beyond 10 years, 15, 20 years, then obviously this is an issue. So development of the bond market is important. Development of the CDS market is important. Developing any one bit of it is not very helpful. So this is the reason, for example, that I worked quite hard on making sure that the bilateral netting issue got sorted. That was a constraint that is done now. Now I need some part of the CDS and the corporate bond markets to evolve. Then we can take the next step of evolving a deeper bond markets. Ultimately, let's be clear. Even the railways, even in India, was funded by bonds raised in the UK in the 19th century. So you need long-term bond markets. You need systems that a secondary market in that. And of course, you need institutions like DFI, at least one big DFI. We already have one NIIF. But if there are other issues that you need to raise, please tell me. And of course, there is one big thing, which is not a financial issue. You need a good legal system to be able to enforce contracts over very long periods of time. That is a critical ingredient, which is not a part of my mandate. But of course, as a lawyer, you'll appreciate, if you want something to be financed over 20 years, you need certainty of enforcement of contracts.
With permission, sir, absolutely right. May I just add, if we look everywhere, most other developed countries, so to speak, not that we are not developed, we are in some cases more than them. We have eagle bonds in America. We have Korean bonds in Korea. We have the Japanese story in Japan. All of these were government-backed bonds. Now, if we were to look at something like that as an institution and actually issue those bonds, at least Nishit Bhai will bear me out, a lot of the pension funds and all would love to get sovereign guarantee and would love to get maybe, say, 100 basis over LIBOR or something like that. So we get cheap money, we get long-term money, and we can leverage that. And really, I've done some back of the envelope calculations, Mr. Sanyal. I will send you a little note that I've worked on it and some solutions how to fund it. And I think, my own opinion, they're real. And we could probably do that in a couple of months.
Okay, I'm happy to look at them. I mean, there are many ways to skin the cat, as you know. But the issue is
not because
which one fits.
I'll send you, sir, not because I look like one. We can call them elephant bonds.
We have discussed that, as you know, as part of the H-lag report.
Yes.
Do we have 1 minute to react, Nilesh?
Yes, please.
Okay. So, Sanjeevji, I think Rajiv raised an important issue. One perspective or one angle that I would like to provide is that we must look at the impact of technology on the infrastructure. Do we, for example, need to build roads and bridges? Just a matter of question mark. If the payback period is more than 15 years, because in next 5 years, drones will lead to, we have done a lot of work around that space, and flying cars, it will be reality in next 5 years, and 10 years it will be common mode of transport, because tsunami of technology comes fast. So just as railways in the US competed with airlines, this infrastructure would also begin to compete. And therefore, one angle we should always look at that if the payback period is a little long, then what will be the impact of technology? I'm not going into the larger detail.
So I think you've raised a very important question. And by the way, I think this will be more true not for long haul traffic. Drones, I think, may well change the way our cities function before they do any other thing. So it's not so much highways, but I think intra-city transport may go through a radical change. So that is definitely an issue. The problem is that, as with anything, how do I begin to make changes today when I do not quite know how drones will pan out as urban transport system? I can see that they will, but what is the plan that I have? What do I do with it? So, I mean, I'm happy to, this is an offline discussion, but I mean, I'm fully aware and I can see that this was going to already influence things. I agree.
So I will be happy to share with you some experiences because like Rwanda and others have done very use. But most important thing that we have to do, and I was with Chief Minister of Maharashtra, with Uber Elevate CEO, and I said they will bring flying cars to India. Mumbai was one of the 5 cities they selected to experiment flying cars. But I said 5 years time they will come. Our regulatory environment will not be ready. So at least we should do some thinking.
So at least in this space, let me tell you, Nishit Bhai, we are ahead of the game. Please read the latest drone policy. It's one of
they are better than the world, I know.
No, I volunteer as Mr. Sanyal's very good coffee bought coffee. Nishit Bhai, you come to Delhi, we'll go and have coffee with him.
Oh,
and we'll have a chat with him. I volunteer his coffee.
Okay.
Yeah, thank you. But no, really, latest rules are beyond many countries in the world. And my whole team on drones has worked on it along with even 21st manned drone to unmanned drones that have come 2-3 weeks ago. It is going to change complete ecosystem. But we should
I agree with you. So we are thinking about it, as you can see, and some part of it I worked on. So do give me feedback. We are willing to change it further. And of course, the implications on that on urban design is something that we have to begin taking into account. The only thing is that I need the drone technology to develop to a point where I can be able to tell what I should be doing. I know I should be doing something to urban design, but I'm not 100% sure what. That's the problem.
Yeah, Rajiv Luthra will organize coffee with Sanjeev Sanyal.
Thank you, Sanjeev.
Mr. Sanyal is buying the coffee board. I can't get it. He has a monopoly.
I'll organize coffee if you insist on drinking it. But I'm quite happy to go
Sanyal Saab, let me tell you
and drink some other coffee as well.
That Nishit Bhai and me are filing a case against you for monopolizing an abuse of dominance. You get the coffee board coffee, we don't.
No, I'm quite willing to swap with whatever coffee you are drinking.
Thank you, Sanjeev Bhai, for your precious time.
Thank you.
It was great to have you at CII Financial Market Summit. We will collate all these suggestions and send it to you. Thank you.
Thank you very much. Namaskar.
Thank you. Jai Hind, sir.
Yeah.